My name is Ask. I'm from Breakfree Trading, and welcome to the first tutorial on how to use Neural Mode. We need to understand first what Neural Mode is. Neural Mode is a mean reversion market making strategy that's powered by advanced AI. It is developed to find inefficiencies in the market where you have a buyer or seller selling a certain amount of inventory against a market maker who's always on the other side of the trade that's buying it when someone else is selling it. And what Neural Mode does is that it finds the inefficiencies between the market maker and the seller and allows us to make money in that gap. And the reason that this works is because, first of all, we are a small player. Okay, maybe we have an account size of $1,000 or $10,000 or $100,000. Maybe we even have an account size of $1 million. This is very small. Okay, this is still very small compared to what actually the size is actually being traded around in the market. So the advantage that we have is that we are small, we're smart, and we are quick to operate. And if we trade with a broker like IC Markets, and there's going to be a link below this video how to get IC Markets, we can also execute without even paying commission. And that's very important when we trade the way that we do, because the way that we operate is that we buy or we sell something very short term only to close the trade. So we might pick up a trade over here on 1 minute time frame and then sell it the next minute for profit. And that's all we do. And that's the only thing we're doing. We are not doing any directional betting. We are not using any idiot waves. We're not using Fibonacci. We're not using RSI. We're not using trend lines. We're not using all of these things that everyone else is doing. What we're doing is that we're waiting for the people to make mistakes, and then we take that money. And this happens every single day. This happens every single minute. You just need to find the right market. So to find the right market, what we want to do is, first of all, we want to go to, right now we're on the 1 minute time frame, and you can see Neural Mode is operating here. And what it's doing really is that it's doing this real-time calculation between the buyers and the sellers in the market maker and the ones who's buying and selling, and finding the gap where we can operate and make money. And we are actually operating the same way as a market maker. We're doing the same business. And that's why this works so well, because we're not trying to predict how high Bitcoin is going to go or how low the stocks are going to go. We're just sitting there waiting for people to make mistakes, and then we ride the back of the market makers, the ones who actually keep the market in control. We just let the big boys move the market for us, and then we basically just join when the opportunities are made available. So, so what Neural Mode is doing here is that it's constantly mapping on multiple time frame of these inefficiencies of what is happening. So you can see that right here it says support, extension 1, extension 2. Up here it says resistance, extension 1, extension 2. But if we look a little bit closer, you can actually see that we also have a line here that says support 5 minute, support 15 minute, support extension 5 minute, and support 1 hour, and extension 15 minute. For the most of the time, the market is simply trading between these levels, right? It's going from here, it's going to here, then it's going to here, it's going to here, and then up here. Most of the time, the market is just doing that. And that's really where we do most of our business all day. We're just sitting and using RTD to identify the direction of the trend. RTD you have here. And we're just using these algorithms that's really good at detecting what is happening in the market right now, who is buying, who's selling, how is it happening, and what kind of trend can we establish. And using this, we use this when we come into the market on the first day to understand, well, what's happening right now and how should I position myself. So using RTD, we can do this trend evaluation across multiple time frames. Right now I'm looking at GBP USD. But if I go to 1 hour and I pull up RTD here, you can see that it has been in an uptrend for quite a while. And it's not uncommon for it to be in these kind of strong uptrends for a while, and then, they develop into a downtrend, something like that. It happens all the time. But right now we can see on the 1 hour time frame that this one is in a healthy uptrend. and it's not looking particularly weak. It's not looking to end right now in the higher time frame. So when we go to 4 hour, we can see that in a little bit higher resolution of what's going on. We also got a strong uptrend in 4 hour. And when we look at 1 hour, you can see we also have an uptrend. So we are uptrending on all the higher time frames. Let's see what happens when we go to 15 minute. 15 minute also looks good. So we're good here. This is actually exactly the kind of market that we're looking for. So now we have an understanding of all the higher time frames. It's time to start understanding where do we buy and how do we engage with the market and how much do we buy. Now, there's multiple ways to trade this. And this is an early release of Nero Mode. And I want you to start with this, the most simple approach possible, which is really simple. Just buying the green bands. The green Nero bands, that's all you gotta buy. But what we gotta keep in mind is extreme volatility. Because at certain times of the day, we will see really strong volatility come into the market, and it's usually at expected times. And these are times where the market makers, the ones that we use, they pull their orders back, so they're no longer operating the market, and the market will often do very volatile movements for like a short amount of time. That can both be an opportunity, but it can also be a big risk if we're not aware it's coming. Because a lot of times when these volatility moves come, they'll be very strong and they will go a lot deeper than just this initial green band. And you can see that from time to time. You'll be able to see that these volatility moves comes in, and sometimes it goes deep, sometimes not so deep. But depending on what kind of news event or volatility that's coming in, it can vary. Now, today, we actually have some pretty big volatility coming in. So let's just understand and let's make sure that we map it out so we know when it's coming. So what I'm going to do is I'm going to go to FX Daily. And this could be any website, anyone that has an economic calendar. I think this one has a nice design. And what I will see is that in my time is 9:30. I could see that in about 3 hours, 3 hours and 30 minutes or something like this, we're going to have the Fed interest rate decision. This is a very big event, has a lot of volatility, and especially today, there's some talks about hike or cuts or whatever, we'll see, but it's definitely going to move a lot. So we want to be aware when we're going into the trading period today. We want to be aware of this time frame. I mean, we want to be aware of this period of time where we know there's going to be high volatility. So what we're going to do is we're going to go up here, we're going to mark vertical line, and we're going to plot it here according to my time zone. So that's 1 o'clock, 1 o'clock and 1:30. So between here and here, we can expect extreme volatility. And that's very good for us to know, because then we know when the market is coming into this, that we want to move our orders out of the market. And that's also why you cannot leave your orders. This is an active duty job. You sit in front of a computer, you can put an alert, but you can't really leave orders going into a highly volatile period and then just expect things to be okay. They might be, but a lot of times you really need to sit here and be ready to take your profits and be ready to adjust as necessary. Okay. So one thing I want you to just understand here first is why our stop loss is where it is. Whenever our market is in a strong uptrending market on RTD, like whenever the market is in a strong trend, and a strong trend really means that we have detected a buyer, an active buyer that keeps buying and buying and buying because they need to buy this asset for whatever reason. We don't know why. It could be a bank, it could be a company that needs to convert their currency or whatever. We don't know. But what we do know is that when these guys buy, they usually, instead of just, they're not going to click manually these big orders. They have TWAP algorithms. It's basically execution algorithms that, are told like you need to buy $100 million of GBP, UP, and they're programmed to buy at certain times at certain price, usually a mean price, and that's why we get these trends where a market is just moving up like this continuously, and even if it goes deep, it comes up again. But what I want you to pay attention to is that when we have detected these strong uptrending markets with RTD, we can be very, very confident that the market is not going to extension 2 on the 1 hour time frame unless that something is seriously wrong and we don't want to be in the market anyway. So the extension 2 on the 1 hour time frame is really like our stop loss, our general stop loss. And the reason for that is, like I said, we don't want to get kicked out of a trade just because the volatility is a little bit high and that the market doesn't, doesn't go our way and it keeps going deeper. Because a lot of times when this happens, I mean, all the times, you will see that it does go into the 1 hour support, but it never really makes it very deep. And the reason for that is because a deviation all the way down to the 1 hour neural band in an uptrending market is a really good opportunity. And there's going to be a ton of different algorithms, a ton of different banks, a ton of different market makers that's all going to engage at the same time and be buying here. So that is why this is really our general stop loss is down here. That's when we are wrong. That's when we're no longer confident in the position and the overall trend and we need to get out. So that's your ultimate stop loss, okay? So whenever you are sizing risk, and you will probably think this is a little bit crazy, but whenever you're sizing risk, it is going to be something like this all the way down. There we go. This is basically what it's going to look like. And the reason for that is because as this market moves down, we will take more positions for each level. And we're going to increase the size of the positions as well. Okay. So some people might be familiar with this, that this is how we have done it in the past. But now we're happy to do this to a much bigger degree. So we're going to keep buying here. We start buying here. Now, we're not going to be buying here going into the volatility period, right? If we're going into FOMC, Fed rate decision, we're not buying here anymore. Maybe we're not even buying here. We're buying these. But when there's no volatility and there's no news or whatever, we're happy to sit here and buy all day. But we don't always know when this volatility is going to strike. We don't always know when someone is going to come in and tank the market. Anything can happen. Accidents happen all the time, or news happens all the time. We don't know what's going to happen, right? So because that we don't know what's going to happen, we can only trade with a certain amount of risk up here at the first level. And it's really where we are just trading a tiny amount. We're trading a tiny amount. And as the market comes down, we start to extend the amount that we're buying. And the reason is that because we are so confident buying down here at 1 hour support or even 1 hour extension 2, we're so confident to buy here because we know that it's almost never gonna get to extension 1 or extension 2 unless something is seriously wrong and we should not be in the market anyway. So this is a dynamic risk model. And the way that you calculate your position size on this is that you can either use Navigator to do it, or you can use, I'll put a link below. We have a trade return calculator on the new Breakthrough Trading website. You go here, you can put in these orders, and you can see how the risk and the win and the losses get simulated. But because that the win rate is so high by trading up here, we can take these risk-reward ratios, which sounds and looks crazy, but are insanely profitable because that they keep happening again and again. But the problems, you will run into problems with two things. First, you're going to get greedy and you will put too much position size up here. And that can work for some time, but eventually you're going to get run over and lose your whole account. So it's not really worth it because the time and the energy that you're going to spend in front of the computer and the profits that you like to keep, it's just not worth losing just to get extreme gains. The gains that you get from executing the strategy alone are good enough that you don't need to use extreme leverage. If you're trading Forex, you want to use leverage between 30x to 50x. And that's because Forex is, a really, the prices doesn't move much. A 1% move for Forex is a big move, right? But when you're trading equities or you're trading crypto, you don't want to be trading with 30x to 50x leverage. You want to be trading with something between 1 to 3x. That's your leverage amount. So what we want to do now is we want to start to calculate and measure out the risk probably for all these setups. And the way we do it is really we just right click here, place order. And we put our stop loss down here at 1.23639. You can see that right here in the corner. So that's our stop loss. You can see we got a leverage of about 1%. So that's good. Then down here, we'll take a second position. This one will increase. Put the same stop loss. See, we got a 2.5% leverage. That's great. Then down here, place another order. And this time we're going to take 4. Same stop loss. And down here, we're going to buy 0.08. All right. So if I pull up my Breakfast Trading Navigator here and I look at my risk, you can see how the risk increases for each position. And that's how we want to do it. And you might even extend this, to buy another one down here, because once the markets come down here and it's an uptrending market, you already done your homework, the market is strong, there's a buyer available, that this thing is going to turn around. So you have confidence. And the really smart thing about the strategy is also just like the mental aspect of it. When you're trading like this all day, you're sitting here and you're really just hoping that you get this filled. But even more, you're hoping you get this filled. And you're hoping you get this filled and this filled. So you don't feel bad. You don't feel upset when the market moves to the extremes against your position, because you're buying more. You're already prepared for that. You're hoping this happens, because when the market in a strong uptrending markets come down and touch the 1 hour support, that you're likely to make a shit ton of money. And I'm not joking at all. So that's really what you want to do. Let's say that this position here got filled now. What is our TP? Well, our TP is actually just neutral here, or maybe resistant. But for the most part, we're just looking to get in and out fast. So you might get a trade open, and then you're just looking to take a few dollars profit. And that's really all you do. But what you got to do is you got to keep updating these levels. You're going to keep moving a little bit with it. Like, it doesn't have to be every minute, but you have this open, you have this screen open. And what you will do is that you'll just sit and watch. And if you have to go somewhere, you put an alert, you create an alert, and it will send an alert to your phone. And then you just wait until that happens. And once that happens, you need to get to your desktop immediately. But the best thing you can do is really to sit and watch this all day. And in the beginning, it's no problem. You can do multiple markets at the same time, but you just want to get a few trades under your belt. You want to get confident with the strategy. You want to start to understand why it's so powerful. And once that happens, that's really where you can start to, open a second market, find another trending market that's uncorrelated, and you can do the same thing on this. And it doesn't even have to be buy orders. It could also be sell orders. So if you have some market that's trending really strong down, you do the same thing, but you do it in the opposite direction. And that is really the strategy. And it might be boring, it might be mundane, but this works. Okay, this is what I know works. This is what I have been doing on this account for the past several weeks, and it generates really good profits. So if you can transition to this, you will make more money than you have made in trading ever before. And the reason for it is because that this is not really trading the same way that other people talk about trading. What this really is market making. And market makers, we don't really, we don't really care so much about what other people are doing or what other people are thinking and so on. We are just waiting for them to collectively make mistakes or for other people to get stopped out or use too much leverage, and they do it all the time. And then we jump on our opportunity the same way the market makers do. And you can either go to the watch list and you can start scanning through the different markets. You can find one that you have in a strong trending market. Let's see what we can find. RTD on, and you can really go through all these different markets. And you can see here we have Euro CHF, and this is a nice market because it has nothing to do really with what we're doing. It's in an average downtrend, but I bet if we zoom in, it's going to look pretty bad. Yeah, like a really strong downtrend. So what we want to do here is that it's the same thing as before. We go to 1 minute time frame. We're very, very confident in this, in this market. And what we will do really is we'll start placing orders the same way. What we want to do is we want to start taking orders here. And you can see that this has been performing really well in the past, right? So you can always look back with the neural bands. You can see how it has performed. That's also what's really nice about this compared to X mode, is that you can really see how this market has performed in the past. Okay, so our stop loss will be up here, 1 hour extension. So let's just mark that. There we go. Start putting trades, sell, and we put the stop loss 0.98978. Great. Then we want to scale in the next position. Next position we're going to take at the 5-minute resistance. A little bit bigger. Same stop loss. And then we want to take position here. This time we want to sell 4. Stop loss. Right? And then the last position, and we could even do more, but the last position we're going to take around here. Now, it's really important that when the market does come down to these levels in the strong trending markets, it is important that you do get the entry, because you have to remember that all these positions that you're sitting in will be underwater at that point. And the reason that we're getting these positions down here is because A, they're going to make up from all the negative drawdown from these, but also secondly, it's just a really good opportunity and you don't get them very often. And we're going to sell 8. So again, my leverage is under control here and everything is pretty much well. And I just got to sit. I'll put an alert on this. I'll create an alert and I can pretty much go do something else. But I want to keep in mind that at the same time, I'm running these markets at the same time. And this is a little bit aggressive, but this is what you can do once you start leveling up. This one doesn't have neural mode yet, so we'll just put it on. All right, so now we pretty much wait. And we want to keep in mind that at 1 o'clock, we're going to have FOMC. Now, when this happens, and I believe GBP USD will be greatly impacted, we might not be buying down here anymore. And when I say might, if it's a really volatile event coming up, this 1 minute support is not going to be anything that's going to hold. It's going to go much deeper. So rather than buying here, we will adjust further down. And then if you're really quick, when it actually comes out, that's where you can sit in real time and watch how is the market actually behaving when the news comes out, how is it interacting with the market makers, how are the liquidity holding up, and then you can decide if you want to move the orders back up. But ideally, you want to move this order down as the market comes into the really strong volatile period. We're only really looking to trade this 1 minute support here when the market is just moving, just moving between levels. But we don't really want to trade it when we have these really strong volatile events that we know it's going to happen, because you can look in the past and you'll see very fast that it's no problem for the market to, in a volatile event, to just spike all the way down here or even down to here. And that is what we prepared for, and that's what we're waiting for. So that is the overall strategy. That is the general strategy to trading as a healthy market maker. And the funny thing is that this is the same as if you go to, let's say, go watch Bitcoin for a second here, okay? So we can see the color over here. So you can see here let's see if we can zoom a little bit out. So you can see that right down here at 28,250, we only have 4 Bitcoins available. But then at 28K, we have a larger amount. And at, as we go down, the depth of the market really increases. And that's because that's how market makers operate. They quote a small side, but a spread consistently on the lower timeframes. The lower timeframes mean, on the a smaller range. And as the range increases, they're willing to buy more and more, because most of the time, just like we know, we can buy really heavily in these extreme periods and do very well. Okay, let's see if anything is happening here. Okay, so you can see that we have an order here coming in, and I'm happy to stay in this order. What I'm going to do is I'm even going to put the TP here, so we're ready to get out of this trade. Let's see if this can actually do something in USCHF moving up. Now, meanwhile, I want to just take a minute here, the AI forecast that we have built in. Now, this is an early version, is an early model, but I think it's going to really improve. But what we have here is we have 2 different AIs operating and forecasting. First of all, we have the levels, which is predicting how the future neural bands will look like and where they will be. And in the middle, we have a version of RTD that operates on very low time frame. You can see these 2 lines. One is green and one is red. And it's basically like, you can think about it like a moving average. The red one is the slow and the green one is the fast. So if the green one is moving above here like this, that means the AI is forecasting that the market's going to move up on this time frame. If the green one is going down below the red one, it means that the AI is predicting this market is going to come down. It's going to pull back. Now, if the green one is already below, but it's looking like it's going to go above the red line, it means the market's going to move up. Now, I do think we can visualize this a little bit better. It's an early version, but that is the general idea here. We can see some time have passed, and we still have time before the FOMC. There's still several hours. So what I'm going to do is I'm going to move this order a little bit up, because you can see that the levels have already changed since, since my order has moved. And you can see actually Sonar here is popping up with the same trade that we are looking at. And you could use this old strategy mode with the stop loss here. You could do this, and it does work. It's a more simple approach, but what I've found is that the market is a highly inefficient place. And while this works, I believe that always being ready for the market to expand into our deeper orders, rather than just writing a single trade here, is a much better approach, and it's a much better way to approach trading. Because if you just trade here, you will be more prone to taking bigger positions, and it can work and you can generate a lot of money, but in the long term, you want to be operating here like a market maker and be ready for these deeper dives, because you can make money. So you can see it looks like it just missed our order, but already there, if it had filled our order, we'd been able to close at profit here. And that's really all we do. That's all we do. We just sit in these small positions and we just trade this all day. You can see that this is moving up now, so I'm going to go ahead and move this a little bit up. We gotta stay, we gotta stay intact with the volatility of the market. You cannot really leave an order here for too long. You gotta adjust it to what the market is doing. All right, we got our first entry here, and now we're actually just looking to get out of this as soon as it gets a little bit down, not too much. Let's see. We either closing it here or we're closing it manually. And again, if this market were to continue up here, we're perfectly fine with that. We're happy to sell more here. We're happy to sell more here. And we're really, really happy to sell a lot up here. But whether that's going to happen or not is actually, we don't know what's going to happen. And that's the whole point. We don't know what's going to happen. So we simply prepare and build our strategy around that anything can happen. and we will still be in a good position. Okay, so just give it a minute. That's pretty much it. There you go. That's our trade. And that's it. And then we pretty much set it up again. So the way we do it is we put 0.1. We take our stop loss from earlier. We put a stop loss 0.98978. That's fine. Put it down. We'll do our next trade up here. Bigger size. Another trade here. 0.4. And we'll do our biggest position here. And you could even extend this even further. You know, it's no problem to do that. And that's it. That's the exploit. And you just sit and you just do this all day. That's all you got to do. I don't know what else to say. It's a little bit boring, a little bit, you know, but it works, and you just keep doing it. And the best way I can explain is like it's like a cheat code. You know, if you have a big account, of course you can trade more size and you'll make more money from trading these levels in between. But like doing this all day and in out is a really profitable endeavor. And all you gotta be aware of, like the key takeaways here is you find the strong trending markets on the higher time frames. You look at the lower time frames, make sure that's all good, that the trend is intact, and we have an active buyer. Then you go look at the volatility for the day. After you found the markets you want to trade, you go look at the volatility for the day, go see what's going to happen. You mark it out so you know when it's coming, and you move your orders out of the way before it happens, right? So after you know when the volatility is coming, you go place your order, and you just do this all day. That's all you do. You just sit here and you take these trades, you get in and out quick, and you can make a ton of money. A ton of money. You'd be so surprised. And you got to make sure that you don't use too much leverage. It's very easy to get, you know, to start using more leverage on these positions, and use, especially here in 1 minute and 5 minute, like start increasing that. You can do it to a point, but you really can't push it too much because you will get run over, and it's not worth doing this business for us if we're gonna get run over like that. So we stick with a good risk model where we are risking, you know, if this market were to completely collapse and fly and take our stop loss up here at 1 hour extension. So if that really were to happen, well, in that case, there's something, you know, some big change in the trend, and this entire strategy that we were operating on, that this market was in a bear market and was in a downtrend, well, that goes out the window. And that's pretty much it, guys. I'm looking forward to drafting some more content for you and showing you how to go about it. But this is really what you want to be doing, okay? And if it's too complex with all these orders, then try to just take a single order and just sit here and do it all day. You don't have to make all these orders. You can just do one at a time. Just do it with a small risk, and then you can add orders as the market moves against you. But in general, you know, this is all you do all day, and you don't always have to take profit right here where I did. Sometimes you can hold it longer, all the way down to support and so on. That's really something you're going to get a feeling for the more that you trade. But overall, this is the mean reversion market making strategy using Nero mode powered by AI. And I hope you make a ton of money and don't fucking over leverage. Okay, I'll see you around.